So would you agree that banks rule the world? I know I think so, and I've seen it in my personal finances and business finances, for sure. So today we're going to talk about why we think that, how they got there, and what you, not just me, not just Amanda, what you can do to change that. Now, can we get out of it? I don't know, but I think together we could make an impact.
First, let me introduce you to Sarah. Sarah is a hardworking woman who believed in the promise of the banking system. She diligently saved her money, dreaming of a secure future. But as she delved deeper into the labyrinth of banking, she discovered a painful truth. The interest rates she paid on her credit cards soared, while the interest earned on her savings dwindled to mere pennies. Each month, more and more of her hard-earned money vanished into the coffers of the banks, leaving her struggling to make ends meet. As she tried to navigate the complex world of loans and mortgages, she found herself trapped in a cycle of debt. Despite her best efforts, she could never seem to get ahead. And while the banks thrived, Sarah's dreams of financial stability crumbled around her. But in the midst of the darkness, Sarah discovered a glimmer of hope. She began to educate herself about alternative systems, ones that valued community over profit, and put the power back into the hands of the people. With newfound knowledge and determination, she embarked on a journey to reclaim control of her finances. It wasn't easy, but with each step forward, she felt the weight of the banking underworld slowly lift off her shoulders. As she looked toward the future, Sarah knew that she was no longer at the mercy of the banks. She was forging her own path toward a brighter, more empowered tomorrow.
In a world where chaos seems to reign supreme, where uncertainty lurks around every corner, and financial markets are now more unpredictable than ever, there's one place you can turn to find clarity and control. Welcome to the Wealth Wisdom Financial Podcast.
Hey, I'm Brandon.
And I'm Amanda.
Join us as we dive deep in the world of personal and business finance
to assist you in navigating through the chaos and building the financial future you deserve.
We believe when conventional financial thinking doesn't get you where you want to go,
you need wealth wisdom.
So if you're ready to take control of your financial destiny,
tune in to the Wealth Wisdom Financial Podcast.
Because in a chaotic world, your money shouldn't be.
Subscribe now and never miss an episode.
That was a powerful story, Amanda. Now, if you guys didn't catch it, go back and listen to that story. And I bet you could put yourself in that place. I know I could. I was thinking about me running a coffee shop and realizing that two people that were working at the coffee shop who didn't show up to work.
They were on the payroll.
They were on the payroll. And they never showed up to work, was Uncle Sam and the banks. 3% off the top on every coffee was going straight to somebody else.
Or 3.75, whatever
it was.
Then they set the terms of that transaction fee every time we swiped a credit card or debit card.
And you think about real estate. People are doing real estate all the time. And the interest rates on, if you're doing real estate as a business, are higher than if you have it for your own residence. I wonder why.
Yeah, all kinds of things. So if you're joining us now, welcome. So glad that you're here. We're on the 8th week in a series of 12 foundations of really important principles that aren't often part of financial literacy that we think should be and are really core to who we are. These are the 12 principles that I would want my son to learn, that I would want to leave as my legacy. And of course, we're sharing them with you because we want that positive things for you as well. Now, unless you're one of the 4.5% of US households, approximately 59 million US households without a bank account. Yes, that's a true statistic from the FDIC as of 2021. Could be more or less now, but that's one of the latest I could find. So unless you're one of those 59 million, you're probably all too familiar with how the banks get compounding interest, like we talked about in our last episode, working in their favor.
Yep.
They might charge 27% on a credit card, but only give you 0.1% interest on your savings account.
Or they could do higher. I mean, it might be higher because interest rates are higher. So
Or
it could
high
be
yield
5.
savings,
you
yeah,
never know.
yeah. And so even if those numbers are closer or farther apart, consider the difference the bank gets to keep and put to work for them. Now, I'm not against anybody making money. Profit is okay. Put profit first, right? We're big fans of that. But unfair usury used to be taken a lot more seriously throughout history. And in some cultures, even today, it's still taken very seriously.
Yep.
I don't even know anywhere I've even heard that word usury. Most people don't even know what that means. It's an unfair charging of interest.
Yeah.
That's bananas. We used to think 20%, 29%, like a lot of people see on their credit cards, was unfair usury. And yet, how many of us are paying that not only on credit cards, but also on car loans, and so forth? So just something to keep in the back of your mind.
I kind of think of it as, the frog when they put them in the boiling water and
Yeah.
they just turn up the heat a little bit. We don't notice it's happening until all of a sudden you're boiled. And I wonder if sometimes and again, looking at the system, maybe that's happening and other people are turning up the heat, trying to pull out stuff from us to make some money for them. I don't know.
But it goes beyond unfair usury. There's also this, in technical terms, fractional reserve banking going on, where you think the $100 that you put in the bank is still there. Well, it's not. We all kind of know this, but let's talk about what that actually means. We're going to draw a picture and talk about it. You ready?
Yeah, let's go for it. All right, so let's say you have $100 in a savings account, $100. You could put as many zeros, 100,000, 100 million, I don't know. Hopefully you have 100 million, that'd be good. As many zeros as you want. The bank is only required to keep a small portion of our deposits in reserves. Let's say about 10%.
Could be more or less depending on the size of the bank, but for simple math, we're just
Yeah.
going to go with 10%.
Yeah, it's probably a little more or less, but it depends on the size, of course. The other portion, 90% in this example, can be lent out to someone else, right? So 90% can then go out to somebody else. What does that person do? They spent that money at a business. Then the business deposits the $90, right? Or $900, whatever it was, if we're adding zeros. The system can repeat about 67 times until we're down to a fraction of a cent. So basically we're spending money, putting it in, spending, putting it in, all of those things that continue to build. If we stop there, your 100% in your savings account is actually over $999 in the economy, and debt is what keeps it circulating, right? So if we want to think about this, is when we talk about money going in and the notes and all that, is it's really about debt. So go ahead and explain that again, Amanda, in your words, because you can explain it even better.
Okay, so your $100, let's say $10 of it stays there, $90 goes out to another person. They spend it at a business, who then that business puts it in the bank. Then 10% stays at the bank, other 90% goes out. You repeat that, you continue going until you're down to like fractions of a penny. You usually get $990 out in the economy for every $100 that you put in the bank. And like, no wonder, right? The banks are making all kinds of money because they're giving you very little growth on that $10 or that $100. And that's actually all that $999, they're giving very little growth, but they're making a lot of money off of it.
And then they'll ask for bailouts and things in the future.
Right. Well, and this is when there's a run on the bank for whatever shape or form that they have to close the bank because they don't have 100% of the deposits available ready to go. Now, one of my, should we leave this up or?
Oh, yeah, let's go ahead and leave it up for a few minutes
Okay.
or.
No, let's check it off.
Yeah.
Okay. So one of my favorite stories is about this gentleman named Marriner Eccles. He was the governor of the Federal Reserve System in 1941. And he's testifying before Congress about the causes of the Great Depression. They're trying to figure out this thing that happened in 1929 and had ripple effects all throughout the 1930s. What caused it? How do we stop it from happening ever again? And so they're interviewing all these people, including the governor of the Federal Reserve. And one of my favorite heroes of the 1900s, Wright Patman, if you've never heard that name before, look him up. Amazing. There's an amazing book called Goliath written by Matt Stoller that talks about Wright Patman a lot. It's how I was introduced to this guy. But I also found him in another book that tells this story. It's not in the Goliath book. It's in a book called The Creature from Jekyll Island that tells the history of the Federal Reserve in a fun story way. But anyway, Congressman Wright Patman, he's the chairman of the House Committee on Banking and Currency. And he's interviewing Eccles. You know, you might see like people testifying before Congress and there's these committee people and they're asking them questions. Yeah. So picture that setting. But in 1941.
Yep.
And the Congressman Patman asked Eccles how the Federal Reserve got the money to purchase $2 billion worth of government bonds in 1933. This purchase was a big part of helping make sure that people were able to get food at the soup kitchens and all those kind of things. So he's like, where did the money come from? How was the Federal Reserve able to do that? And Eccles responded, we created it. And after a couple exchanges, they go back and forth. Eccles finally got to the heart of the matter, finally told the truth. That's what our money system is. If there were no debts in the money system, there wouldn't be any money.
Can you say that again?
If there were no debts in the money system, there wouldn't be any money. Straight from the words of the governor of the Federal Reserve in 1941. So to go back to our example of $100 in the bank, if there was no one borrowing the $90 from the bank, then the entire chain would end.
Yep.
There's only $100 in the economy, not $999 in the economy. Just let that sink in for a second. If there was no debt, there would be no money. Now, you might have heard one of the first things you need to do to get your financial life in order is to get out of debt. First of all, since that's become conventional wisdom, debt is bad. You should not have debt. Get out of debt. Household debt has actually increased.
Right? Yeah, it's interesting how that is. We've talked one way, but yet it's increased.
Yeah.
Maybe Dave Ramsey isn't doing so good at his job.
Or it's just reverse psychology. The more we tell people to get out of debt, the more they'll be in debt, which is good for the economy. So let's just tell people to keep getting out of debt. Reverse psychology. Who knows? Treating us like little kids. More likely, though, our economic system is currently organized in such a way as to keep as much debt as possible. There's the consumeristic culture that screams at us, buy, whether it's material possessions or experiences, we're told consume, buy. You got to keep our economy strong, right? All those things. We're told that during COVID, we were told that during the Great Recession.
Yeah, remember, we need to keep consuming. We need to keep going.
Then there's things like mortgages. They used to not have 30-year amortization schedules. They were historically much shorter. But now we're told to take out a 30-year mortgage. That's what everybody does. From nations taking on more and more debt, right? Like this doesn't happen just on a family scale. It happens on national levels. And then the nations are barely able to keep up with the interest on those debts. And the whole nation, as a whole, is on the edge of bankruptcy. The current system built around banking isn't working. Yep. It's making the banks and their executives richer and richer, moving the capital to the capitalists. And where is that coming from? It's coming from individuals, families, everywhere.
Now, what we are not saying is stop using banks, right? We have to.
Most of the time we
Yeah,
have to.
I mean, we have banks.
Remember, there's 59 million Americans who don't have a bank account.
Yeah,
It's not a requirement.
I guess I don't know what do they do? Like just cash?
Cash.
Or how-
Yeah. And they could be being taken advantage of by currency exchanges where, you know, they have to pay $30 every time they cash a check, whatever. But yeah, it's
Yep.
not a requirement.
Well, and also I think about this as going back to the original when I started here, is having a coffee shop in order to buy a cup of coffee. No one has cash anymore. It's convenient. They have a credit card. So credit card companies are then saying, oh, well, we're going to charge you for that 3%, 3.75 or 10 or whatever it is. It doesn't matter. And they can, and we have no other choice.
Yeah.
Right.
So it's this cost of convenience. What we have to remember is that we use banking because it's convenient, but there is a cost to that convenience. Just like it costs more to order from DoorDash than it is to go pick up at the restaurant yourself, potentially, right?
Yeah.
That the same thing is happening with banks. We want to increase awareness about this, make sure people know how the banking system is really working so we can be more intentional about how we use it. Too many people are paying those large interest rates while getting very little growth in their savings account, or maybe they're being subject to the volatility that we talked about in Foundation 7, while they're also paying a lot of interest on cards, right? Max out your 401k, but you're not getting, you know, the same actual rate of return that your credit card companies are charging you. There's kind of this trade-off to paying for convenience that too many people just don't know that they're making.
Yeah, they don't even see it. It's not in their statements, or maybe it is. It's just at the bottom, way deep. And
right, yeah. If you ever try to look that up, yeah,
it's really hard to find. Trust me, we've tried.
And then once you hear this of how the banking system really works and that fractional reserve banking, and then also realizing how much the banks are looting normal families, then you have to know that there is an alternative. Most people never hear about this alternative. It's a system that actually has been in America since before the Federal Reserve.
Yep.
It's a system that predates the US dollar. And it's a way of storing and using money that has served Americans and kept their money within their families for generations. The system is integral to our economy. It literally builds bridges and helps cities run and builds, you know, large buildings that people can have their offices in and does so many things. And it gets money out of the banking system and moving in and through the economy in just a different way that I think all of us benefit from, whether we realize it or not. Now, go ahead.
I do want to share, like, as we've learned about this and why we wrote even our 5 Smooth Stones book, is thinking about ourselves, right? When we were having that coffee shop, we were realizing Uncle Sam and this other guy was taking all this money, and we were like, what the heck? And we learned, maybe we can be our own bank. Is that possible? Is there such a thing as bank on yourself? And can we do that? And there are people will say, yes, but you can't do that, or it's your money, or blah, 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 all kinds of things. But here's the thing that I've learned. As we've done this, we said, okay, there has to be an alternative. There has to be a way. And we've seen it work for us. That's why we're doing this. And also realizing we want to help people break free to have, again, going into our last video, have foundational wealth, to build a good foundation, not just so the banks can take it from us or other people, but how do we build this for generations and bank on ourselves, build a way that our kids can do that, build a system that can stand the test of time. And that's really why we do it, and why we're like, man, more people need to know about that. There is another way. Yeah.
So while there are some really awesome people in the world trying to change policy, get more regulation of banks, have them have larger reserve requirements, things like that, they do some really great work. Our approach is, let's change this system one family at a time. one individual at a time, one business at a time. Where are we storing the money that we need for our financial futures? And are we storing it in a system that's going to make money off of our money when we could be making money off of our money without risking it too much? Now, there are lots of books written about this topic. We have some recommendations that we'll put in the show notes of this episode if you want to start learning more about it right away. But don't necessarily feel like you have to start researching and reading, and you have to read all these books to learn what it is. We're in Foundations 9 through 12. We're going to share a little bit more about it. But also, you can get a good idea of your top questions about it, and if it's a good fit for you in 15 minutes. Here's a little video / audio, if you're listening on the podcast, to tell you more.
Ready to take the next step towards securing your financial future? Whether you're planning for retirement, saving for your dream home, or you just want to make your money work harder for you, the team at Wealth Wisdom Financial are ready to assist you. And now, it's easier than ever to see how we might give you a boost on your financial journey.
Schedule a 15-minute discovery call with one of us today.
And let's discuss your questions and your financial goals together.
Don't wait any longer. Your financial freedom awaits. Schedule your discovery call at www.wealthwisdomfp.com/call.
So I know we said a lot here. There was so much here, and you're probably like, oh my gosh, I don't even know how to begin, where to start. I feel like I'm in Alice in Wonderland, going under into this crazy different world. And the reality is there is something underneath. It's magical. There is amazing things.
Except not magical.
It's not, yeah, but
it feels magical, but it's not. It's real. It's more real.
Yeah,
I would say. Anyway.
Okay.
Sorry.
So it's more real, not magical, but feels magical sometimes to me, because I'm able to do things and people are like, how did you do that? I'm like, well, this is how. And they're like, I didn't know it was possible. I'm like, it is. So with that, go learn about this and step into this world.
And if you really want to learn more about it, hit that subscribe button so you don't miss an episode. And you can also get your copy of our fabulous book, 5 Smooth Stones, so that you can start jumping into all of the foundations that we've been sharing in weeks, in Foundations 1 through 8, like today, but also go ahead and get 9, 10, 11, and 12. And more, right? This book has a lot into it to not only help you understand what we're sharing, but start to implement it so you can have a brighter financial future. Thanks so much for being here. We hope that you live long and profit.
The topics presented in this podcast are for general information only and not for the purpose of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.